Welcome to Rivonomics. I am Salahuddin. Let's start with something curiously corresponding that the world of money has been quietly borrowing its vocabulary from the river system this entire time. It has been doing so not metaphorically, not poetically, but literally. Because once you slow down and actually listen to how finance talks about itself, you start noticing something strange or odd that more than it sounding like math or like numbers, it sounds like the river system. And today we are going to decode that language term by term so the financial world stops feeling abstract, intimidating, or locked behind jargon and starts feeling recognizable. Welcome to the borrowed dictionary of finance. Because here is the problem which most people face with finance. The concepts are abstract, the language is technical, and the explanations assume you already understand the complex monetary system. But not all human brains learn complex matters that easily. Some learn by stacking the unfamiliar subject on top of a familiar topic. And reverse. Rivers are familiar. We know how they start, we know how they flow, we know how they split, pool, flood, drain, and sometimes capsizes. So, instead of fighting complexity, Rivonomics does something simpler. It translates finance into a river system. Because finance already speaks that language. Now let's prove it. Currency from rivers currents. In a river, the current is the force that moves water forward. In finance, currency is the force that moves economic activity forward. Same root, same logic, same physics of movement. Without current, water stagnates. Without currency, economies freeze. When river velocity slows, the ecosystem collapses. When money velocity slows, markets contract. Rivers follow channels created by nature. Money follows channels created by policy, incentives, and markets. Movement is life in the river system as well as in the monetary system. Everyday life example. When your salary is delayed, your whole month postpones. Economy level example, when the government restricts currency circulation, the economy contracts. Business level example, when customers stop spending, cash stops moving into a business and operations freeze. Cash flow. From water flows, money flows. A river stays alive because its water is always moving, circulating, renewing, refreshing itself. When water stops flowing, it turns stagnant, swampy, and unusable. When money stops flowing, businesses suffocate and collapse. Cash flow doesn't mean having money, it means movement, circulation, and continuity. Water flows in a direction shaped by the river bed, and money flows in a direction shaped by systems, incentives, and structure. Block the flow of water and the river dies. Block the flow of money, the business dies. Flow is survival in rivers and also in finance. Everyday life example, when your monthly income flows in but immediately flows out to bills, you feel financially stuck. Economy level example, when national cash flow slows, the entire economy weakens. Business level example, a business with strong sales but delayed payments struggles to survive. Bank or bankruptcy. From riverbank, a riverbank defines boundaries. It channels flow, it prevents destruction. Without banks, a river would not nourish land, it would flood it. Financial banks serve the same role for money. They don't create only value, but they also contain, direct, and stabilize cash flow. A healthy bank, a person or business keeps money moving where it should. A weak bank, a person or business lets money spill where it shouldn't. And when those boundaries collapse, when trust breaks, you get bankruptcy. Bankruptcy is not just financial failure, it is structural failure. It is the financial equivalent of a river breaking its banks, uncontrolled flow, widespread damage, and downstream collapse. The language isn't coincidental, it is architectural. Everyday life example: if you suddenly lose access to your savings or income channel, your personal finances react into chaos. Economy level example: when a major bank fails, an entire economy faces shock and instability. Business level example: a company without financial controls or safeguards can collapse quickly under pressure. Income streams. From rivers, streams. A river is rarely a single straight line. It is built from many streams, many small inputs feeding into one larger system. Income works the same way. A salary is a stream, a side business is a stream, investments are streams, royalties, dividends, digital assets, all streams. Some streams are constant, some are seasonal, some grow stronger over time. People with one stream survive. People with multiple streams absorb droughts, shocks, and build resilience. A single blocked stream weakens a river. Multiple streams keep it alive. Small streams may look insignificant, but together they create rivers powerful enough to shape landscapes. That's how wealth forms, quietly downstream. Wealth doesn't form upstream in effort. It forms downstream in alignment, where cash flow steadies, widens, and begins to accumulate over time. Everyday life example: if your job income stops and you have no side income, your finances dry up. Economy level example: countries with diverse industries remain stable, while single industry economies suffer when one sector declines. Business level example: a business with multiple revenue streams survives shocks better than one dependent on a single client. Financial channels. From rivers, channels. Water doesn't move randomly, it follows channels, paths carved by terrain, pressure, and time. Money behaves the same way. Financial channels are the routes and courses money travels through, such as industries, platforms, institutions, systems, and infrastructures. Money flows where channels already exist. It rarely flows where effort alone is applied. People who understand channels position themselves inside them. People who don't understand channels are carried by whatever flow reaches them. When channels shift, entire industries rise or collapse. Those watching the channel, those who move early, thrive, but those reacting late struggle. If you don't know the channels, you simply don't direct the flow, you just move wherever it pushes you. Everyday life example: if you only earn through one narrow path, your financial progress stays limited. Economy level example: when a new platform or industry opens, money flows rapidly toward it. Business level example: a business positioned inside strong financial channels, e-commerce, payments, logistics, finance, grows faster than one operating outside the flow. Source of income. From rivers, source. Every river begins somewhere. A spring, a glacier, rainfall. Money does too. Every rupee, dollar, or unit of value has a source, such as labor, ownership, leverage, systems. The nature of the source determines the strength of everything downstream. Clean, renewable sources create healthy rivers. Fragile or toxic sources pollute the entire flow. Some sources refill themselves. Others dry up if you stop feeding them. People who control their sources control their future. People who depend on borrowed sources remain exposed and vulnerable. If you don't know where your money comes from, you can't protect it, you can't scale it, you can't redirect it. No source awareness means no control. Everyday life example: if your primary income source is unstable, your entire financial life becomes shaky. Economy level example: countries built on a single income source face volatility when that source weakens. Business level example: a company relying on one client or one product is always at risk. Money circulation. From reverse circulation, water circulates, it loops, cycles, and renews itself through movement. Money does the same. That's why we talk about currency in circulation, circulating capital and flowing liquidity. Circulation keeps water oxygenated and life supporting. Same ways, circulation keeps money useful, valuable, and productive. Still water decays, so also still money diminishes through inflation, erosion of value, and lost opportunity. Fast water circulation strengthens a reverse ecosystem. Fast cash circulation strengthens an economy's ecosystem. And just like in reverse, circulation is controlled by structure. Banks, policies, markets, and incentives determine where money flows, how fast it flows, and who benefits from its overall movement. Money isn't meant to sit still. It's meant to move, and whoever shapes circulation shapes power. Everyday life example: when you hold too much cash idle in one place, your finances feel stagnant. Economy level example: when money stops circulating through spending and lending, the economy slows into recession. Business level example: if a company keeps capital locked instead of moving it through operations, growth stalls. Liquid assets. From liquid water, water is valuable because it is liquid, easy to move, easy to use, immediately accessible. Assets are called liquid for the same reason. Cash is fully liquid, stocks are semi-liquid, convertible but with friction. Real estate is minimally liquid, valuable but slow to move. Liquidity is not about worth, it is about speed. The speed of conversion, the speed of access, the speed of response. Just as liquid water keeps an ecosystem alive in moments of need, liquid assets keep a person or business alive during financial stress. The more liquid the resource is, the faster you can adapt, react, survive, and even seize opportunity. Liquidity determines speed, and speed determines survival. Everyday life example: when you have quick access cash during an emergency, you stay stable. Economy level example: economies with strong liquidity recover faster from shocks. Business level example: a company with liquid assets can pay suppliers, seize opportunities, and survive downturns.